hit that next target. And I had mentioned C3 AI Incorporated, a company of the technology sector and internet information technology here off the daily interval. I had mentioned in my previous video on the 1st of April 2023, trading spot price $33.57, and it would be ideal to begin scaling in short. Bull traders, long traders start to sell into those longs right into this key functioning resistance, 34.27 price resistance, coinciding with the primary hidden downtrend line, multiple reactionary highs, reactionary lows, really across the entire map here, and how it had a key functioning level every single time it had been rejected. Amongst every time it's been back tested, and that was good for an 80% crash there. But again, just a key inflection point, and if we did have that reaction and or reactionary high amongst this key functioning level, these divergences, we'd put in a beautiful divergent high, coinciding with negative and or bearish divergences, really amongst all four indicators, heavily increasing the odds for more downside to come, offering an objective short trade entry. And C3AI Incorporated suffered some big fundamental news today, and really setting the new record for the largest single day drop in its history here. And there it was. The entire trade thus far was good for, call it a 30% crash there. And we are trading right amongst that 24.38 price resistance. But there we are, trading right off this key primary uptrend line, off the reactionary lows of December. Multiple reactionary lows to help validate that, and that needs to be heavily defended, coinciding with the 50-day moving average hovering down below there, that key resistance. So we have really come across a triple line of inflection point. Call it a triple line of inflection. Gap resistance, gap support, 50-day moving average, primary uptrend line, and the 24.38 price support. So just a key pivotal inflection point for bull traders, dip buyers, the long traders, long-term investors, bull traders. They need to step in right here. This is the time they need to step up. They need to step in right here and defend this key functioning level really at all costs. And bear traders, short sellers, they want to see a solid breakdown below here, finally putting in that definitive sell signal amongst that key resistance and 50-day moving average onto the next move down below to the 236 fibs retracement there. Zooming out now and taking away the red drawing tools, I've added two key new support targets here, red at 1789 price support here, and the 1554 price support target there. We do have the 200-day moving average hovering in up above, right around that key inflection point of that 1789 price support. And then ultimately, of course, the 236 fibs retracement. That is the ultimate. I truly believe that if we crack that key level, I truly believe the selling will become extremely more violent, in my opinion. That's when a ton of stops, gap fills, margin calls, a bunch of stops go off right there around that key inflection point. But a lot of work to be done. I've added these key new functioning levels in case any short sellers are in it, swing traders are in it for the long run. I know it's only been about 3 or 4 days and we already hit some of these key targets, but that's what you want to see. You want to see a solid candle, daily candle close below on a solid break below that triple line of inflection point. And you want to see some of these targets get hit there. And if some of these key levels get taken out, I would only expect for it to get pretty extremely volatile in that sense. Following allegations made by short seller Carisdale Capital that the company in AI-C3 software developer had serious accounting and disclosure issues here. And remember, I posted this chart 3 or 4 days ago, long before the allegations were made, which really was technically induced, putting that divergent high, just textbook technical postures and similar bearish continuation patterns. Really was the entire story being technically induced, in my opinion, especially noting that the headlines related to the drop. The stock price approached a significant resistance level that coincided with hidden primary inflection points. And that's exactly what happened. The charts, once again, manufactured the headlines.